substance regulations, who it applies to, and what you have to do next. And then if there's time, we'll have a quick question and answer session with our valued speakers. And any questions we don't get to, feel free to email them. We'll have the email addresses up. So our speakers tonight, Bill Anderson, a former global CFO at the Royal Bank of Scotland, Corporate Banking Division, a former head of internal audit in 3 corporate divisions and 2 functional areas within RBS. He's a board member of the Raya Private Family Office and a strategy advisor to a number of businesses in the UAE. And joining him is David Daly. He's a UK qualified accountant and graduate of Trinity College in Dublin. He's over 20 years of experience in transformational environments across a broad range of industries, 14 at executive level. He's an author of an ongoing series of articles on VAT in the UAE, published in The National, which I'm sure many of you have seen, and has previously written articles on global markets and business practice for other publications, including Evidence Business 24/7. They are from Gulf Tax Accounting Group, who's a key player in VAT, cloud accounting, training and business advisory in the UAE, with the GCC and the Greater Middle East and North Africa region. So over to you, Bill.
Thank you, Gary. Good evening, everybody. Thank you for joining us tonight. We're going to be very specific about what we're covering as part of the economic substance presentation tonight, because there is a lot of misunderstanding out there at the moment about what people need to do, who's impacted by it, and you know what they need to do now and over the next few months, and when they need to do that. Okay, so we'll send a copy of the presentation out to the wider membership as well post the event, and I think there'll be a video as well for you to have a look at. Any questions, as Gary said, please feel free to email us. We'll provide our email details at the end of the presentation. So tonight we're going to cover a little bit of the background around what is economic substance and where does it come from? When did it become effective? What types of businesses and entities are caught? Are there any exemptions? And how can Gulf Tax Accounting Group help you? So just a very brief piece on the background. As most of you know, there's been work by the US government, by the European governments to try and improve tax governance. And that's led to a global initiative whereby countries who charge corporation tax are trying to make sure that international companies and company structures are not trying to move profits, what is called base erosion and profit shifting, from high tax destinations to low tax destinations, low or no tax destinations. So a number of countries have come under the economic substance process, and that's really why we're looking at it here from the point of view of the UAE and wider areas in this part of the world. But it's something that you'll see pretty much everywhere. And I suppose, you know, it's a good opportunity for people to look at what their structure is, if they fall into that structure, and how can they tax plan effectively as well. It is part of the UAE's overall commitment, though, to sign up to this as part of the OECD framework on base erosion of profits. So again, this is where it's coming from. It's trying to ensure that if you have a US company, for example, you know, who's making a lot of profits, that you don't try and manipulate the system and, you know, create effectively a shelf company or a kind of a framework of a company here to manipulate that system. You can set up companies here and you can do it quite legitimately. You have to make sure you do that properly. So that's a bit of the background why it's there. I guess, David, maybe if you could run through the flow so that people can kind of understand what it's all about and how does it work in reality.
Hi, good evening. Okay, so we talk about, well, who's affected? If you're a legal trading entity in the UAE, you have to look at your entity and you have to start asking questions. So there are people who will not need to do it. And they are people who are, where the government have a 51% or greater ownership of the entity. The word they use is licensee. Okay, so you look at your trade license, it says licensee, and that's the entity, and something owns the entity. It could be a professional trade license, in which case the licensee is an individual. Okay, but it's the principles are the same. So everybody has to take a look in the mirror and see, of the 9 relevant activities, which we'll get into in more detail, if one of those applies to you or more, it can be more, then you need to do one. If it does apply to you, you need to inform by the notification date to the relevant trade license issuing authority that your entity comes under, that you fall into one or more of those. If you do not, you still need to go back to them and submit this form and tell them that none of those apply to you. Now, and you have to do this again by the reporting date. Okay, and these are sitting on top of us. A lot of entities are the 30th of June. There are a couple before that. And there is one in particular at the end of July. So you do need to check that piece of information. What we're looking at here is 2019, the financial year 2019. Okay, so that's what's relevant. If you have done no trading at all in 2019, then you would return the form and say none of the areas apply to me because there have been no revenues going through my books. Okay, so let's say you fall under one or more relevant activities. Now what? Well, you've done the notification. The next step is you have 6 months, i.e. to the end of this year, to prove that your entity has economic substance. And there's a legal term, we talk about substance over form. And I see this with companies I've worked with on these type of issues, where the paper says they do A, but when you look at it, they're also doing B, C, and a little bit of E. And it's those items which are getting them covered by the economic substance. You cannot use bureaucracy to get around this because it goes to the heart of what the entity is actually doing rather than what the paperwork says it is. Okay? So if you do fall into one of those relevant activities, the next thing you do is you prepare a pack. This is a sizable piece of work which proves that your entity has substance. It proves that the entity is here and it's not just being used to shelter profits from entities abroad. Okay, so transfer pricing is a phrase you probably, or a wording that you are aware of. It's where you are moving profits from a tax region to a low tax or non-tax region. Okay, so you have to prove that by the end of the year. There's one little bit of good news in a way in this, because by the way, this is going to be annual. This is going to be every year going forward. For those who fall under a relevant activity, putting in the work this year, getting it done properly. If you can do it yourself, fantastic. If you need support, get it. That's something we do. So once you have that pack done, what you're doing in the following year is you're reviewing that pack and you're going, well, we reported for 2019. We're now in 2020. What's changed? And you update that. And the best phrase I've used to describe it is big pack, little pack. So in the first year, you do a lot of work. In the second year, it's a lot easier. Okay, so that's fundamentally how it works. Now, if we scroll down through this, you get to one of the key areas within the 9 activities, and that is intellectual property, IP. So what is done, the IP is shipped to this part of the world, and your UAE entity then invoices related parties in other jurisdictions where there are taxes, moving the profits to here. A high-risk IP is a deeper definition, which is part of the reporting process, is where that IP does not originate here. So now you've got a parent entity in another country. It then moves the IP to here, and then the entity here charges internationally. Okay, now, and there might not even be an employee. It depends. So if you cannot prove that you do have substance, come the end of the year, then what the authorities here will do is automatically exchange that information with the relevant competent authority. Okay, so that's fundamentally what this is. If you do meet the substance requirements and the authorities are happy, you will be so notified.
So I guess, you know, one of the things, and this is a good flow chart put together by the Ministry of Finance. One of the things that is a little bit misleading is one of the very, you know, questions at the very top. You know, if you have a trade license, if you don't have a trade license here, but you have a business here, you know, does this apply or not? Does economic substance apply? Even if you're not one of the 9 activities, you have to do the notification. Okay, so there's 2 things you need to do this year potentially. One is you definitely have to do the notification. For most companies, that's the 30th of June. And then potentially, if by having a review of your business, you fall under one of these 9 activities, then you will have to do a full return, an economic substance return at the end of the year. And it's quite like that. If you don't get your return in on time, and we'll talk about this later, there are penalties. But for me, the biggest thing is not so much the penalties, and they are quite challenging, some of these penalties. The biggest challenges for companies who it does apply for in terms of the activities. Let's say, for example, you had a South African company, you know, a parent company back in South Africa, and you were doing a lot of work for them over here, then effectively this could fall into some of these holding or group company structures. And so what will happen if you don't make yourself, and if you don't prove economic substance before the end of the year, and that may require you to change your structure, it may require you to have a management person in place, premises, etc. One of the downsides of this is if you fail it by the end of the year, then that information will be automatically communicated to the tax authorities in South Africa by your regulator from this side. Okay, so this is actually much more challenging, because then potentially, depending on the nature of the case, you could find yourself liable to quite substantial taxes and potentially penalties in South Africa as well. So this is why it's important to get this right. For the vast majority of people, it's a pretty straightforward piece. I'll just move to the next slide. So when is it effective? Well, it was put in force on the 30th of April of last year. And, you know, very few people have been talking about this. Unlike VAT, where VAT was rolled out with a lot of workshops, you know, quite a long time. And even people were saying to us, oh, we've had hardly any information on VAT, but there was a lot of information on VAT. I can't really say the same on economic substance. And also probably because of COVID-19, you know, people have had a lot of other big issues on their minds outside of this. But it is in force. And as David said, it's in relation to any of your accounting matters in the year of 2019. So if you only started a business in 2020, that won't be relevant for you this year. It'll be next year's when you're doing your first notification period. So that's why you need to have a look at this and see, does it apply to you? For most people who have been up and running and in business in 2018 and 2019, it will be relevant. Okay, so the 2 things that we spoke about a while ago is the notification deadline is relevant to everybody. It doesn't matter whether you're one of the 9 activities or not. Everybody has to do the notification deadline. I was asked a question as well today by an individual. They're a freelancer, and there's lots of freelancers operating over here. Well, freelancers will definitely have to do a notification. The challenge around that at the moment is the information is pretty scarce. So in the first instance, our recommendation is whoever issued you with your license or with your, I'm trying to remember what freelancers get, permits, you need to go back to them in the first instance. And I would actually do 2 things. I would contact them by phone in the first instance for speed, but I would also email them so that you have proof you've contacted them. That's important. And look, it should be a fairly straightforward piece of work, but some companies do have freelancers working for them on the ground here as part of a bigger company back home. And this is where potentially they get swept up under economic substance. For companies that have to go for the second phase, it's a filing deadline. As David said, effectively there's a compliance piece of work. So when and if you get inspected by the relevant authorities in this, and they might come along to you in 6 months or 12 months, you need to be able to provide them a document or evidence that you have reviewed your business, that you can prove to them that, you know, it is or it isn't relevant to you. And if you do have to provide proof of economic substance, you also need to demonstrate that. So we'll go through some of those bits in a little bit, but those are the two key things. And for number one, is relevant for everybody as far as we can see, unless of course you're a 51% government entity. So we have a list here, Dave. You might just run through these ones because I think most of them are pretty straightforward, of the 9 specific activities.
Okay. Banking is what it says on the tin. Insurance is what it says on the tin. Investment fund management, again, is what it says on the tin. Right, lease finance business is a much more interesting one. So say you have an entity here, an entity in South Africa, and there is a loan between the two with interest charged. You would, in that case, fall into the category of lease finance business because there is a loan between the two entities. Okay, that's just by way of example. Headquarter business, it's got to act like a headquarter. And again, we're talking about a UAE entity. So again, this tests. Shipping business, again, does what it says on the tin. Holding company business is a more interesting one. This is one of those where you would only be a holding business. You could be a holding and a lease finance business. Okay, so you either are a holding company, a pure one, or you are not. You may be a holding company, but you may also within that be providing loans to other group companies, in which case you're not a holding company, you are a lease finance company. Intellectual property business, I spoke a little bit about earlier on. That's more, that's the one that scares the most internationally from the point of view of profits being moved to low tax, no tax jurisdictions. And I think I gave you an example, but just to, again, we're talking about an entity in this country which has IP which was created in another country. The IP has been moved here and it has been invoiced in to, say, South Africa, where it's being charged for, and effectively it is taking profits out of South Africa and moving them here. A good bit of work is required on this one. Finally, distribution and service center business. This is where your UAE entity is selling either goods or services, say into South Africa, to a related party. Okay, so that's your list of 9. Bill now will go into some of these in a bit more detail.
So if you fall into any one of these, and obviously as Dave said, some of them are very evident. You'll know if you're a banking business or not, but the ones we've highlighted, 4, 5, 7, and 9, may not be immediately apparent to some people about where they sit. Just a quick one, we mentioned about exemption. If you have a partnership with the government, say where they have 51% or more, you don't have to do anything at the moment, okay? But I would expect within the next 12 months or so that those companies would also have to look at their affairs. And again, as just good practice, a person should be able to, map out what their business is and how it's impacted. David mentioned lease finance business, so it's a tricky one here, but the actual definition is if it's a UAE entity engaged in lease finance business, whether it provides a credit or rents assets, equipment, or any other good to another person for consideration, then that isn't immediately apparent. It's not like you might be set up to be a lease financing business. If you're providing those types of services to connected companies, then this is what you will fall under in terms of one of these 9 buckets, basically. So again, what's a headquarter business? This is another one where a lot of companies set up their headquarter businesses. And again, if you do fall under this heading, effectively what you're saying is that this entity in the UAE is basically taking the success or taking responsibility for the overall success of groups of other companies, which will be in other businesses. So if that is the case, and a lot of the profits come up to the company from those various entities, then you need to show economic substance. So, you may well say you're a headquartered business, but if you can't show what is adequate, and again, adequate is one of these very subjective terms, if you can't show adequate substance, which will validate you having a headquarter business. So for example, if you had one individual running a company which makes $100 million and you have one entity or one employee in your company here, that would be a very difficult one to argue to say you have economic substance. It's not impossible. It depends on the nature of what your business is. But you'd have to look at each individual. Is that individual a bit of a patsy? Are they someone who's a very low-level administrator who's just put in as a GM on the books? Or are they actually somebody who really is a senior person in this type of business? Do they have office space? Are accounts being done here? That's another one where you could show substance. Is the income generated here, or is just a kind of a gathering point for the income? So again, there's a list of checks which a person can go through, and what they're going to look at, like anything, is they're not going to look at what you have told them. They're going to look to see what in reality is there. So substance over form, really important. Okay, so distribution and service centers. There will be a lot of distribution and service center businesses in the UAE. So this is one of the common questions I've seen coming up at various seminars that we've had on this. So for example, you may have an entity here which purchases from their foreign connected company, i.e. their parent company back in India or China. And then those goods in some cases come here. So they're effectively imported and stored and then passed on as part of something for resale to, say, Africa. Now, that's an opportunity for a company to transfer profits in, say, China or India, which would be taxed at quite high corporation tax rates, to their setup in the UAE, who would then obviously be able to distribute those profits in a much more tax efficient way. So this is exactly what these guys, what the authorities would be looking for. Similar for service centers, instead of actually goods, it's about services. So again, companies will have to look at this. I think this is probably one of the most frequently occurring areas which is going to get impacted. And then, yeah, I suppose, one thing we wanted to talk to people about, okay, so what? What if I don't bother doing it? Well, the reason why you need to do it is twofold. If you fail to do the notification by the end of your deadline, which for most companies is the 30th of June, and we do have a list which is changing all the time actually, but we have a list which we can also provide. There's going to be fines ranging between 10 to 50,000 for failure to notify. There'll also be fines between 10 to 50,000 for failing to accurately complete your notification. If you fail to demonstrate substance in the first year, the penalty is again 10 to 50,000, but with your information exchanged to the tax authority back to your home destination. And the information that will be exchanged is the information on your company here, and the ultimate parent company, and the ultimate beneficial owner. So it'll be very difficult, if you're a South African who owns, a couple of layers above this, ultimately that will come out in the wash, okay? And once that comes out in the wash, and the nature of these inquiries, and we know how this works because one of our other partners is a former tax inspector, is once the tax guys latch onto you, they don't let go very easily. So it's better to be doing this properly ahead of time and being proactive around it. If you have a second failure to prove economic substance, then the fines go up quite a lot. So again, they go from 10 to 50 up to 100 to 300,000. Again, the exchange of information happens. And then ultimately, there is a danger that you're going to lose your trade license. Because again, the authorities here won't want to be seen to support that type of business carry-on. For me, the ultimate penalty outside of the 10 to 50,000 and the 100 to 300,000 is the tax implications from your home country. So if I'm an Irish business and I run my Irish business between Ireland and the UAE, and I don't do this properly, then Ireland actually is probably not bad in some respects when it comes to corporation tax, but when it comes to income tax, it's one of the highest countries in Europe. So from my point of view, that's something I'll be looking very carefully at. Again, just I suppose a little refresher for people as well in terms of what powers do these guys have? Well, effectively, if anyone has ever had a VAT inspection, most people, unless you've had it, won't realize they have the power to enter your business premises. They also have the power to take any documentation. As part of the economic substance, it has to be as part of an investigation, so they can't just randomly do this to people. So they will, obviously do this in a very formal approach, but if you're not playing ball, then, you know, they will come in heavy-handed. And then ultimately, once that happens, for example, even when it comes to VAT inspections, reasonable hours will apply on this. I know they seem to have more powerful approach when it comes to VAT. So, you know, they have power to go pretty much where they want to get the information that they need. So it's going to be very difficult for people. And we find that a lot where people think, well, you know what, I have a different, you know, I have a second passport or another citizenship. That doesn't absolve you from this. So it's better to be prepared ahead of time. But for me, the key part here is making sure you get the notification done. And once that is done, you then have 6 months to get your affairs in order. Dave, if you want to run through how we work with clients in terms of what way we can help them in this.
Okay, so the first stage is to get an initial assessment. So do you fall into a relevant activity? If you do, which one or which ones? Then that needs to be filed as per the requirements of the trade licensing issuing authority. You may have seen a form going around, but the reality is the trade licensing issuing authorities have the power to do it in different ways, and they are. Once that's done, we then move into phase 2. Phase 2 is proving that you do have economic substance, and that starts with doing a gap analysis. And that is, where am I now? What is happening in detail in my organization right now? And then we go, well, where do we need to get to a point that we can satisfy the authorities that the entity here does have economic substance and that there is no overt attempts to shift profits from overseas to here. And again, we would support with the filing for that. There, as Bill spoke about, there may be restructuring required. There may be elements of your organization which need filling. And they can be worked on as part of this. One of the ways to prove substance, for example, and just going with this is, do you have accountants on the ground? So, i.e., do you operate here? And are you using services here, be it your own or be it outsourced? And that's something we can help you with. Are there directors on the ground? And do those directors have the experience to do the jobs expected of them? From non-executive to executive support to company secretarial. And again, we can help you with that. One of the other elements is standard operating procedures, which substantiate that activities do happen here and that it's properly documented how these things are done. Now, everybody should have standard operating procedures as a matter of form. And again, we can assist with those types of work.
Yeah, it's worth highlighting, obviously, because of COVID-19, obviously there was a restriction on people coming in here to do board meetings. So there's probably a little bit of leeway this year in terms of board meetings, but it is very important. This is one thing I find quite a lot across companies. People don't record their board meetings, so they don't do minutes. They don't make their executive decisions clear that they happened at the board meeting. You can't, as I mentioned earlier, have a very low-level person being your local director on the ground, because if that person actually isn't fundamental in generating the actual income for the entity, then that will fail economic substance. So one of the things that they will be looking at are, who are the people that they're being listed as directors? What are their CVs? So again, this is the really important part, that if any of these things are gaps for companies, then you do have time to adjust those gaps. But the earlier you start, the better. And like most of these things, people don't really pay attention until they get the first hit, or they hear about the first person getting a first hit, and then people do something about it. The problem with that, so for example, looking at a client at the moment who, they have a significant amount of income going through their company structure in the UAE. They may need to restructure themselves slightly to tick all the boxes. If they don't do that by the end of the year, then the danger is, and these guys are in the hundreds of millions when it comes to their turnover, that that amount of money you know, if it was to be referred back to its home state, and if it was taxed, will result in millions and millions of dollars of lost tax. So again, it's really important that these things are looked at properly. And look, if something doesn't have economic substance, no amount of structuring in the world is going to avoid some of these things. But for most cases, it's just about, you know, it's proper tax planning in some cases, proper structured planning, and just preparing in advance. So look, the benefits of obviously working with the likes of GTAG, and you know, we're doing a quick pitch here. It's saving you time, money, and stress. We have found that people who have used the wrong accountants and the wrong tax people, you know, it's not the accountant or the tax people that get the hit. It's the business owner, and it's the employees who lose jobs as a result of it. So it's about avoiding penalties and potential legal prosecution. It's about going back on a timely basis with people who know what they're doing. And again, if you are selected for an economic substance investigation or audit, then just like we do on VAT, we go in on the ground and help companies get ready for it. And that's always quite a helpful thing to have as well. So I guess, look, we've tried to cover what is an extremely complex topic in as succinct a manner as possible. We did mention that, look, if anyone has questions or answers, obviously we're happy to talk in the time allotted. Or at the same time, you know, we have the details there for David and myself, for you to send any inquiries that you may have. And we're more than happy to have an offline conversation with you as well. I'd like to thank you for your time. And
Thanks, David.
Thank you very
Bill.
much.
We are a little bit over our time. There's no questions in the chat box. Thank you very much, David. Thanks, Bill. Thanks for your work. And thank you, everybody else, for attending. Any quick questions from anybody? Okay.
Super. Thanks again.
Thank you.
Bye.
Thank you very much.
All right, thanks. Good night.
Thanks.
All right.